Today is the 24th of August, 2010. Welcome to today's Silver Log. And what we are looking at here is an increase in the silver market. This chart is SLV, and I have the volume on the bottom part of the screen because it's relevant today. We've had the biggest morning volume ever since July the 19th. And it's the summer, so it doesn't say much in comparison to some previous volume. However, it is showing an increase, or what a lot of times what you're looking for on the breakouts, where you can run into 6, 7, 8, maybe even 10, 12-week bull markets, is that rise of volume to indicate the beginning of it. That doesn't mean that it will be that, but it does represent, this gives us reason where we might be potentially at least getting to the top part of this range. This trend line, this red trend line that connects these highs, has a good likely effect to be a level of resistance. The odds would state, okay, we are at an area that we have hit on two different occasions. We are just rising huge towards this level now, so it might be an area where it slows down, either corrects through time around the range, or maybe it could retrace a decent percentage. I have some Fibonacci numbers on the blog, and if we do increase to new levels, then they would obviously have to be the numbers would have to be adjusted. And the volume today, as far as numbers are concerned, on SLV at 10:30, there was roughly 5.5 million for the SLV, and the highest that we've seen since the 19th of July. We have 3 3/4 on the 27th, and again on August the 2nd. So we've had 2 days where we had 3 3/4, about 4 almost, and we've had 5.5 here, which is by far the most. And the highest on this area here is roughly around 10, 11. We had 11 on that day and 10 here, so we most likely should easily get above that level. And we did recently have some end of the day volume that was really big on the 20th of August. The 4 o'clock, it was huge. And silver doesn't usually have big volume at the end of the day in comparison to like the Dow and such, but nonetheless, the volume increase is something to look out for. Now, on the weekend, I was talking about this chart, which all it is the percentage you are above whatever your 50-day low happens to be. And in silver's case, it's 1733. It's going to remain 1733 for a decent amount of time. So therefore, it needs to get above this 7.33%, which would translate into the 1860 as an area of a breakout. And that's where it would be, it's a technical indicator, and I've just looked at it, or really started calculating it just recently. So how good of a calculator it is, the odds would state, or the math would state, that it would work pretty good, because what it does is it helps find breakouts from the bottoms, because it doesn't state, okay, we're going to buy at this bottom. That's what Fibonacci does. This doesn't. This indicates, well, if we're going to have a big gain, it's obviously going to go above 30%. So it's got to break some sort of resistance, and that's really what it's mainly about. Now, this is the kick coat chart. This is the big rise that we've seen today. It did gap lower. It's very close to the bottom that we had late last week. And just a small retracement, really not that big, and it's had a little bit of a bull flag more than anything, and it really hasn't consolidated much as far as price is concerned. It's showing us more of a consolidation through time. And as far as the Fibonacci, we can take this low and this high. There's about a 72-cent difference from 1776 and 1848. So the 23.6 is 1831. We'll say 1830 even, roughly this line here. So it's only come halfway or so towards that level. The next one, 38.2, is 1820, which is the area where we found support earlier today. 1803.5, so in between, roughly right where the red line here is, as an area of resistance, which is yesterday's actual resistance. And that's something that's very common, seeing previous resistance acting as a level of support. The 161.8 is 1892. We'll get a little bit more into that, well, now actually. But before we do that, we have the 23.6 at 1831. When you have the big gains or sell-offs, either way, and it hasn't retraced much, what you do is you take the 23.6 and multiply it by 61.8, which gives us a number of 14.58%, which means that on a retracement of 72 cents, that's 1838, which sure enough is exactly where it's finding support. And that's huge. Like 23.6 is very bullish if that's what it gets. But if it's getting the one before then, this is showing us huge bullish action. And once again, that doesn't mean we're not going to break this support. For if we do, where are we going? We're going to 1830. And then the Fibonacci that you calculate is from 8, or wherever this bottom is, but you'd say it'd be around 1830. From this high of 1848, that's 18 cents. So you take 68.1 or 61.8% of that, add it to the bottom, that's the resistance area that you would likely face. So you come down to 1830, then maybe you rally up to 1837, 38, up to even 40. Question is now, okay, is it going to roll over and this would be the top, or is it going to find that support, break the resistance, and then get back to its previous high at 1848, where it would most likely have a good chance of breaking it? Now, as far as the next upside level is concerned, if we take this low here within this high, the 161.8% level gives us a price objective to what do we have here? 1867. 1867 would be the next Fibonacci level that it would be going towards. Now, as far as articles are concerned, a nice cool little interview here from David Skurica. I probably pronounced it wrong, at least most likely. Why Jim Rogers likes silver so much, a video with David Morgan. It's not the greatest, but I'm going to put it on there anyway. At least it's from the mainstream media or the propaganda press. And David states silver will suffer in the sell-off in stocks, which it may, where gold will not. And talk about a couple silver manipulation videos on there also. And as far as the volume's concerned, if you look at the freestockcharts.com, we can see here how the volume here has a bigger surge. Now, it has dried off quite a bit during this time consolidation, but we can see here, you can probably draw a trend, or you could definitely put a trend line down below here, and the volume that we had before, we're talking 25 million. It's got to get to 18 million just to get back to the July 1st volume, which had a pretty big or a pretty decent size sell-off. So thank you for watching and have yourself a great day. Bye-bye.